Hello and welcome to Trade Finance Talks. I'm Mahika Ravishankar, Deputy Editor at Trade Finance Global, and we're coming to you today from the 2025 Sibos conference in Frankfurt, Germany. I'm joined today by Sam Mathew of Standard Chartered, and we're going to talk about ESG, all three letters, in emerging economies and what banks can do to support the transition. Sam, welcome to Trade Finance Talks.
Thank you for having me.
So to start with, let's have a few quick introductions. Please just tell me a bit about yourself and your role within Standard Chartered and what brings you to Sibos this year.
Right, so I run the documentary of traditional trade at Standard Chartered Bank. I also do a bit of industry work. I sit on the ICC Banking Commission as one of the vice chairs of the commission. I'm doing a lot of work with standards and policy, etc. What brings us all to Sibos is really about meeting a lot of clients and counterparties, understanding what's top of mind for clients. And certainly this year it's been about digital assets and stable coins and a lot of uncertainty given what's happening in the world.
Yeah, digital assets, I don't think I've gone one conversation without talking about. It's a really big theme. But I want to draw the attention more towards the uncertainty and especially in furthering a more inclusive financial ecosystem while tackling all these new pieces of turbulence coming at us. So banks and corporates, I'm sure, have an ESG framework internally. I wonder how that feeds into their work in emerging economies. How do you balance the development needs of the countries where you're entering with the standards which you operate yourselves and for your clients as well?
Yeah, so I think, look, there's no one single answer. The good thing is the industry has come up with a set of standards, at least in the trade finance world. So the ICC has come up with the International Sustainable Trade Finance Framework. So we as a bank have adopted it. Many banks are working on it. And the corporates would have their own framework, which hopefully aligns to these standards as well. And our job is then to make sure that we are speaking a common language and a common kind of target when it comes to what is sustainable, what certifications are acceptable, and help the clients on that journey. Many of them are on a transition path, many of them are already there. And how does their journey align with ours in terms of getting to a goal that hopefully helps everyone?
So frameworks are key in this whole process.
Standards and frameworks are key in terms of making sure we are all measuring something that is equal in terms of how we approach it.
So you're on the ICC Banking Commission, you said. How are these frameworks developed? Who comes up with the different points?
It's a good question. So there's the good thing is it is a very collaborative effect. They say it takes a village to raise a child. So it's something like that. So you have a lot of representation from a lot of banks, institutions, corporates, industry bodies, and you come together to define what should be the taxonomy, and you base it on some work that has already been done. Maybe some regions have come up with it. There's European taxonomy on sustainable trade. Singapore has something else, for example, and you see what's the best and practical way, at least from a trade finance perspective. That's the approach that particular working group took.
Interesting. I want to turn now to talk about trade digitalization. We mentioned digital assets as a big topic of Sibos this year, but of course the digitalization of trade documents and trade processes has been a big topic of every conference for the last few years. How far are we on that journey, and how inclusive would a digital trade ecosystem be? I'm kind of thinking about the investment in infrastructure that's required in emerging economies to support a digital transition.
Yeah, it's a good question, Maika. And there's no simple answer, and there's no one answer, definitely. And I think we should take a step back to look at what is trade digitalization. Mm-hmm. I think there's a fundamental difference between digital trade and digital trade finance, right? 85% of the world's trade happen on an open account supply chain basis, which means the bank is not involved in the flow. I think so. The fundamental question to ask is, why are the buyers and sellers in that flow where the bank is not even involved? Why is that not getting digitalized? And the challenge there is the real physical logistics involved and the title documents involved in that flow. So if trade gets digitized, trade finance will follow. So if I can give you a data point, more than 70-80% of the supply chain finance that we do as a bank, most banks, is already digital, fully digital. Wow. Which means I can go to the client's ERP system, take a data of his purchase order, his invoice, and I can finance it because it's happening on a post-facto basis. Mm-hmm. But where the bank is playing an intermediary role, a trusted intermediary role, where the buyer and seller don't trust each other, there the bank needs to really look at evidence, and because it's part of the flow and is letting the goods go on the back of documents. That document is generated by a carrier sitting out on the sea that is been loaded with goods, right? For that to digitalize that entire ecosystem of the logistics chain, the vessel Excel, generating an electronic bill of lading versus a physical bill of lading. All that has taken time, right from not having standards initially to not having the legal framework. Both of that has started to evolve now, right? So the DCSA and BIMCO have come out and said, here's the digital standards, and we're going to force our members to be 100% EBL ready by 2030, I think, right? And the MLETR, the MLETR frameworks and Digital Electronic Transactions Act is progressing. It is slow, but it's progressing. US, Singapore is there, UK is there, Abu Dhabi is there, and the most recent one, I think, was France. So
I thought actually Mauritius most recently has moved.
Okay, maybe I missed the Mauritius one. The point is countries are adopting it.
Yeah.
But that itself will not move the needle because there's a technology element to this, right? And the technology element is that you need to be able to prove in a court of law that the digital bill of lading you are in possession of actually sits on this platform, and it is a unique singular copy that nobody else will come and claim. And the only way to do that is if everybody is on the same platform, or the platforms have become fully interoperable, where there's a single version of the truth across platforms. And to answer it's a long-winded answer to your question, and the answer what I'm trying to get to is that interoperability, now that standards are there, is a key thing that needs to happen for these digital documents to flow, just as paper would have. Like you can send a DHL or a courier to me or anybody anyone anywhere as long as there's an address, because you know that the courier company works and it will deliver it, irrespective of which courier company is being used. So you could use digital and DHL, and somebody else may use somebody else at the destination. The digital document has to work in the same manner. Right. You may be on platform A, somebody else receiving it is on platform B, my importer is on platform C, but it should be able to work seamlessly, and we are not there yet.
What do you think is required next for this seamless interoperability?
I think it's incentive in terms of why would the platforms start interoperating with each other. There is a business rationale and a business incentive question to it. There is a technology question, which I think is already answered. The APIs can talk to each other. It is a business incentive. Why should I open up my platform to the other platform, and why should I let it communicate? I think that is where the industry should put some pressure, I think, to say either there has to be consolidation between the various platforms, or there has to be a stand taken where people look at the greater good and actually start opening up to actually do those handshakes. Then it will start making sense, because I can be a member of one platform, I can receive BLs or whichever documents from 15 other platforms that I'm not even a member of. When do we get there? I don't know. So your answer was how long it's going to take. I think it's going to take some time. The standards are there, the technology is there, the intent is there. But the incentive question needs to be answered at some point to force that interoperability to happen. And there have been pilots done on it as well, so don't get me wrong, but the pilots have to get to a point where it's going to be scalable.
I guess the incentive just has to come from Unisa and everyone kind of deciding it at one point. Yeah. Let's do this now. That's right. So I want to just close on tariffs. It would feel amiss to have this interview without talking about tariffs. Yeah. How has that turbulence impacted emerging markets?
So not just emerging markets, but even in the developed world, it has definitely caused uncertainty with clients, and that uncertainty has caused a risk aversion. So you see a lot of clients waiting and watching and not making maybe big investments. So there's a little bit of wait and watch. And there's actually been an increase in therefore the risk aversion, because you don't know what's going to come next when you wake up in the morning. So not just emerging markets, but across other markets as well, we have seen that uncertainty. And what we've also seen is, therefore, the supply chains are getting reconfigured a little bit. We have seen the flows between China and ASEAN go up. We have seen the flows between ASEAN and Middle East go up compared to, let's say, 2 years ago. So I think the way people buy and sell and look for new markets, destinations, as well as new sources of supply, I think it's going to get a little more intense. However, the US dollar continues to be the primary currency of settlement for trade. I don't think that's going to change rapidly anytime soon. Longer term, maybe there's some more balancing as other currencies are being pushed. But the trading corridors are definitely getting changed, and clients are looking at new counterparties and new sourcing strategies.
Thanks, Sam. It's been a really interesting discussion. I actually had a lot of unanswered questions, which you've done me a favor in clearing up. So thank you very much for your time.
Thank you.